Hello, and welcome back to the channel. I'm Algabot, and today we're taking a close, educational look at a MetaTrader 5 expert advisor called ATR Scaled Momentum Shift. This strategy blends two well-known tools, the average true range, which measures volatility, and a momentum reading of how far price has traveled over a set number of bars. Together, they form a volatility-normalized momentum system with a moving average trend filter. Over the next few minutes, we'll explore how it defines a signal, how it manages its stops and targets, and how it reads a chart candle by candle. Everything here is for learning only, so let's dive in. So what exactly does this expert advisor do? At its heart, ATR Scaled Momentum Shift is a trend-following momentum continuation strategy. The core idea addresses a common problem with raw momentum. A 30-pip move means something very different in a quiet, sideways market than it does in a fast-moving trend. To handle that, the strategy takes the net price change over a set number of bars and divides it by the current average true range. The result is momentum expressed in ATR units. In other words, how many average ranges price has traveled over the look-back window. Because the reading is scaled by volatility, the same numeric threshold stays meaningful across foreign exchange majors, gold, and index markets, and across both calm and volatile conditions. On top of that normalized momentum, the strategy adds an exponential moving average as a trend filter. A long position is only considered when price is trading above that moving average, and a short position is only considered when price is trading below it. This keeps entries aligned with the broader direction rather than working against it. The expert advisor is designed with 15-minute to 1-hour charts on major currency pairs and gold in mind. Though the time frame is simply whatever you attach it to during testing, nothing is hard-coded. It trades one position at a time, waits a short cool down between entries to reduce overtrading, and can optionally stand aside in unusually quiet markets using an ATR floor. This type of approach may appeal to traders who are studying systematic, rules-based momentum methods and who want to understand how volatility normalization works in practice. As always, remember that trading carries risk. Losses are a normal part of any strategy, and everything in this video is educational information only, not financial advice. Let's walk through the logic step by step. First, an important design choice. Every decision is made only on fully closed bars. The expert advisor watches the currently forming bar purely to notice when a new bar has opened, and then evaluates the bar that just closed. This makes the strategy non-repainting, meaning its signals don't shift around after the fact. On each newly closed bar, the strategy calculates three things. It reads the exponential moving average over the trend period, it reads the average true range over the ATR period, and it measures momentum. Momentum here is the difference between the most recent closing price and the closing price a set number of bars earlier. That raw difference is then divided by the ATR, giving normalized momentum in ATR units. Next, the strategy checks for a crossing. For a long setup, it looks for normalized momentum rising up through the positive threshold. That is, the previous reading was at or below the threshold and the new reading is above it. For a short setup, it looks for normalized momentum falling down through the negative threshold. A crossing on its own isn't enough. The trend filter must agree. Price must be above the moving average for a long or below it for a short. Before any order is placed, a few guards are checked. Only one position is allowed at a time. A cooldown requires a minimum number of bars to pass since the last entry, which reduces churn. And an optional ATR floor lets the strategy stand aside when the market is unusually quiet. When a long signal passes every check, the expert advisor buys at the ask. The stop loss is placed below entry at a multiple of ATR, and the take profit above entry at a larger ATR multiple, giving a fixed reward-to-risk shape. A short mirrors this exactly at the bid, with the stop above entry and the target below. Finally, once a trade moves far enough in its favor, an ATR trailing stop begins to follow price, ratcheting only in the profitable direction and never loosening. This is how the strategy aims to protect open profit while letting a trend continue. Let's look at the actual MetaTrader 5 code driving this. At the top are the input parameters you can adjust in the tester. TrendPeriod sets the moving average length. ATR period sets the volatility window. MomPeriod is how many bars back the momentum measurement reaches. MomThreshold, defaulting to 1.0, is how many ATR units of momentum are required. The stop-loss and take-profit ATR multiples default to 1.8 and 3.0, and there are trailing, cool-down, and base lot settings as well. Below the inputs is the heart of the logic. The line computing normom takes the last close minus the past close and divides by ATR. That's our momentum in ATR units. The crossed-up check confirms the previous reading was at or below the threshold while the new reading is above it. And cross-down is the mirror image on the negative side. Two simple booleans, trend up and trend down, compare price to the EMA. Now look at the two signal blocks. In the long block, when crossed up and trend up are both true, the code reads the ask price, sets the stop-loss below it at ATR times the stop multiple, sets the take profit above it at ATR times the take profit multiple, and calls trade.buy. The short block is the exact opposite. When cross down and trend down are both true, it reads the bid, places the stop above entry, the target below, and calls trade.sell. Notice both sides derive their stop and target from ATR, so the risk distance automatically adapts to current volatility. That's the whole entry engine in just a handful of readable lines. Now let's bring it all together on a chart and watch the strategy read the market candle by candle. On the price panel, we've drawn the trend EMA as the blue line. Below price is the subpanel that really matters for this strategy, normalized momentum measured in ATR units. Notice the two dashed levels there. The positive long threshold sits at plus 1.0 and the negative short threshold sits at minus 1.0. These are the lines that momentum must cross before the strategy considers a signal. Let's start on the left. The first couple of candles are quiet and drifting sideways, sitting right around the EMA. In the momentum panel, the reading is small and flat, hovering near zero. There's no thrust in either direction yet, so the strategy simply waits. This patience is by design. Because momentum is scaled by ATR, the strategy isn't fooled into acting on a move that only looks large. Then price begins to build. The next candle closes higher, and the one after it pushes up with a strong body, closing well above the EMA. Watch the momentum line at this point. It climbs and crosses up through the plus 1.0 threshold. That's exactly the condition the strategy is waiting for on the long side. Momentum has thrust through the threshold, and at the same time price is trading above the trend EMA, so both conditions agree. This is where the buy entry marker appears on the chart. As soon as that long is armed, the stop loss is placed below entry at a multiple of ATR, and the take profit is set above entry at a larger multiple, giving the fixed reward to risk shape we saw in the code. With the defaults, that's a 3-to-1 target measured against a 1.8 ATR stop. Now watch price follow through. The next few candles march steadily higher, each closing above the last, while momentum stays elevated above its threshold in the bullish thrust zone. Price reaches the take profit target, and the trade closes for a gain in this illustration. Along the way, had price stalled after moving in our favor, the ATR trailing stop would have started to follow it once the move exceeded the trailing start distance, protecting the open profit. Now the picture changes. After that push, price tops out and begins to roll over. A candle closes back below the EMA, and the momentum reading collapses out of positive territory, drops through zero, and keeps falling. On the next candle, momentum crosses down through the minus 1.0 threshold, and at that same moment price is trading below the trend EMA. Once again, both conditions agree, this time on the short side, and the sell entry marker appears. For this short, the risk framework simply flips. The stop loss now sits above entry at the ATR stop multiple, and the take profit sits below at the larger multiple. Watch the following candles fall away, each one printing a fresh low, while momentum stays pinned below its negative threshold in the bearish thrust zone. Price slides down into the take profit target, and the short is complete. Step back and notice the pattern. In both trades, the strategy did the very same thing. It waited for volatility-normalized momentum to thrust through a threshold. It demanded that the EMA trend filter agree with the direction, and only then did it commit. It didn't chase every small wiggle. The cooldown and the one position at a time rule mean it takes these setups patiently, one at a time. That combination of a volatility-scaled signal and a trend filter is what the whole strategy is built around. That brings us to the end of our look at ATR Scaled Momentum Shift. We covered the core idea of dividing price momentum by the average true range to measure movement in volatility-adjusted units, the exponential moving average trend filter, the crossing conditions that arm a long or a short, and the ATR-based stop loss, take profit, and trailing stop that manage each position. Remember, everything here is educational information only and not financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses are a normal part of the process. If you found this analysis helpful, please like the video, leave a comment with any strategy you'd like us to break down next, and subscribe for more MetaTrader 5 strategy analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.